The question is, can the MAP dispute settlement deliver an effective dispute resolution mechanism? And I'd like to flag here 3 areas of concerns which basically mirror those that are mentioned by Hakim. I think when you look at the MAP framework on paper, I use the term paper to manage expectation. Of course, the OECD has done tremendous work in this area, in particular with BEPS Action 14, the minimum standards. The OECD was quite aware that you cannot reinvent the wheel, so you have to work with the state-to-state dispute settlements, but you have to enhance it. So there are 2 main guiding principles. The first one is that access to MAP should be granted as widely as possible, and that the decision not to engage in a MAP can be subject, as the case may be, to judicial review. And also, on the operation of the MAP, although the taxpayer has no formal standing during the MAP process, competent authorities are obliged to seek to resolve the case in a fair and objective manner on its merits. All of this is in line with customary international law. There's nothing revolutionary in this, but at least BEPS Action 14 has the advantage of setting the obvious. But still, when you contrast this framework with what happens in practice today, there is a gap, and that gap leads to uncertainty. I've tried here to essentially address the first area of concern, which I've separated between improper access and improper operation of the MAP. I would say that what you see in practice, at least in some cases, is that you have both improper access to MAP, and I've given you some examples. Access to MAP can be blocked simply because you have domestic anti-avoidance rules. And then you have the problem that Hakim mentioned, which I call personally the MAP dodging. For example, you deny deduction based on domestic law with de facto the same transfer pricing outcome. And then you have the problem of tax collection, penalties, etc. With respect to the 2 items, I mean, it's very simple. I mean, the substantive arguments to defeat that position is very easy. I mean, if you look at MAP dodging, there is no basis to deny access to MAP in these cases. Whatever the basis of the adjustment on domestic law is irrelevant if you have an Article 9 situation in substance. The treaty characterization is the only characterization that is relevant for purposes of deciding whether access to MAP is to be granted or not. But the fact that you have these cases, despite BEPS Action 14, is troubling, and I'm welcome that the OECD has identified the problem. The second areas of concern is when the competent tax authorities are unable or unwilling to deviate, so they formally grant access to MAP, but they do not deviate. And this may typically happen in the context of the application of general anti-avoidance rules, audit settlement. And in the case of audit settlements, you have the criminal law ramifications. So you are forced to settle pending criminal ramification, but then when you move to the MAP, you're not able to deviate from the position taken at the level of the audit, and therefore the other contracting state is simply requested to eliminate double taxation. This is not proper operation of the MAP. And then you have fake maps. You open on Monday, you close on Friday, and nothing happens. Fake maps. This is not proper operation of the MAP. So I mean, if you contrast this with BEPS Action 14, some adjustment is necessary. I mean, these sounds like, perhaps exceptions or isolated cases, but I can tell you they happen in very civilized jurisdictions. Very civilized jurisdictions. And frankly speaking, I just don't understand. Anyway, second area of concern, I think it's widening the scope of dispute prevention. And I think Hakim talked about this. We have the BAPA framework, which, to remind you, is based on Article 25.3 of the OECD Model Tax Convention. And with the BAPA framework, we have the BAPA manual and a list of best practices encouraging the competent tax authorities to consistently apply the commentaries and the transfer pricing guidelines. Whether they do that in all cases is another question, but at least they're encouraged to do this through the BAPA manual. In my opinion, you could easily develop a similar BAPA framework for non-TP cases. I think Hakim alluded that. And I think that would be very relevant in practice to deal with issues such as characterization issues, jurisdictional issues, residence, permanent establishment, beneficial ownership, BPT, and so on. And I think that approach would recognize, in the words of the introduction to the OECD Model Tax Convention, that taxpayers make extensive use of the commentaries in conducting their businesses and planning their business transaction and investment. So I'm strongly in favor of widening the dispute prevention framework to non-TP cases and not just to transfer pricing cases. And I think that could be easily done given the language of 25(3). Then there is the more, I would say, difficult question, which is the second area of concern. And if you take the bigger picture that you have with respect to the MAP framework, is that if you look at global tax controversies globally, what you see is that the MAP, as good as it gets, only covers a wide range of, a narrow range of disputes, which is basically tax treaty and transfer pricing disputes. But you have lots of disputes which are not covered by any, currently not covered by any dispute settlement mechanism. I'm talking about indirect taxes, misapplication of domestic law, unfair or arbitrary legislative enactment or administrative practice, due process issues. Okay, I'm getting carried away. Expropriation through taxation. It can happen. It can happen. And globe disputes. Let us remind that we do not have currently a dispute resolution system for globe. So, if you take a holistic, and that was my initial proposition, a holistic approach to tax dispute, you cannot avoid the fact that the landscape of tax controversy is not just confined to tax treaties and transfer pricing. And if you take into account that rules that apply in a cross-border context are increasingly shaped by global tax standards, this, of course, the archetype example is the globe framework, but you also have that in indirect taxes and VATs. In some countries, you have model legislation. In developing countries, you have model legislation which have been completely copied from the IMF model legislation. So you do have common rules. You increasingly have common rules that apply in cross-border situations, whether they concern direct or indirect taxes. And the fact that you do not have any dispute settlement mechanism at the global level is a concern. Of course, in the OECD Model Convention, you have Article 25(3), which says that competent authorities may also consult together for the elimination of double taxation in cases not provided for in the convention. Yes, but I mean, that doesn't take you very far, let's face it. Why? Because 25(3) basically becomes a problem when you don't have a basis in domestic law to solve a dispute. And it requires double taxation. So it is not, I would say, the promise to expand the scope of dispute settlement. But at this point, I'm just trying to flag that there is a discrepancy between what's around, what's available at the international level in terms of dispute settlement and the range of tax disputes. And if you take into consideration that litigation can only solve the problem in one country, there you go, you have a problem. So I very much welcome the point made by Hakim that work is being done on indirect taxes, not on just VAT, I would basically say indirect taxes, because that's a live issue, and in particular in the APAC region.